Hello traders and happy hump day. Welcome to the London Forex Broadsheet's daily video wrap of the markets for Wednesday, July 23rd. The euro fell against the dollar during the London and New York trading sessions after a Eurostat report said new industrial orders in the Eurozone fell 3.5% in May and were down 4.4% for the year. Also helping the dollar's cause was the Energy Information Administration's weekly oil inventory report, which showed gasoline supplies increased by 2.9 million barrels last week. This is a sign that demand weakened during what typically is the busy summer driving season. The euro broke below the LFB S1 at 1.5715 and held below on a test of resistance. Technicians believe a bearish indication is given when a so-called continuation pattern is established, and the pair now looks set to test the LFB S2 level at 1.5641. The pound jumped against the dollar as well as the euro and yen after the MPC minutes were published. The minutes showed that one policymaker voted to increase rates for the first time in a year. The tally at the June meeting was 7-1-1. With Archdove David Blanchflower voting to decrease rates 25 basis points, while Tim Besley voted to raise by the same amount. Afterwards, the implied yield on the December short sterling futures contract advanced 10 basis points to 5.97. This means traders increased bets for the BOE to raise borrowing costs by the end of 2009. The cable found support on the LFB pivot at 1.9963 during the advance and found initial resistance close to the LFB R1 at 2.0028. The Aussie created a weekly chart doji candle, a reversal signal of a weekly uptrend at the close of last week's trading. The Aussie is declining further this afternoon as the stronger dollar feeds into lower commodity prices like gold, which has dropped by $20 an ounce and is the biggest fall in 6 weeks. The Aussie fell all the way from the LFB pivot to the LFB S2 at 96.23. The loonie rose by 1.1% yesterday, which is the most this month, and continued its slide today after the weekly U.S. oil and gas inventory report indicated U.S. demand for gasoline is weakening during the summer driving season. On the daily chart, the loonie recently found resistance at the widely viewed 20-day moving average, a break of which will be noted by many followers of the pair. The Swissy rose as traders sold U.S. Treasuries, pushing the benchmark 10-year yield to 4.146 for an increase of 4.7 basis points. Switzerland's trade surplus rose to a fresh all-time high in June, helped by demand from emerging markets, but overall exports slowed as economic cooling in the United States takes its toll. The June trade report published on Tuesday showed the weaker export performance also underpinned views that the Swiss National Bank will hold interest rates steady despite high inflation. The Swissy had found resistance at the LFB R1 at 1.0382, but managed to push past there as U.S. equities gained during afternoon trading while Treasuries lost. The dollar-yen rose in overnight trading but held resistance at 107.88, which was dead on the LFB R1. The yen finally managed to push higher as U.S. equities gained during the afternoon session in New York. It was also helped higher by the financial sector, which was boosted after Bloomberg reported that John Paulson, the money manager whose wagers against the U.S. housing market helped him earn an estimated $3.7 billion last year, is now seeking to profit from Wall Street's search for capital to offset mortgage write-downs by starting a hedge fund which will invest in the world's largest banks and brokers. On the upcoming economic calendar, at 0400 Eastern Date Time, we have the German IFO Business Climate Index, at 0430 we have the UK retail sales, and at 10 a.m. we have the US existing home sales. In Asian equities, stocks advanced after U.S. investors were reassured by Wachovia CEO Robert Steele's plan for the troubled bank. The Nikkei gained 138 points or 1.05% to 13,323, marking the second consecutive day that the index is trading in a positive territory. The Australian S&P ASX climbed 63 points or 1.27% to 5,069. European stocks closed higher as oil fell and traders became more confident that banks would weather the credit crisis. On the day, 16 out of the 18 industry groups advanced, helping the Dow Jones Stock 600 gain 2.1% to 286. National benchmark indexes advanced in all 18 Western European markets except Norway. The UK's FTSE 100 rose 1.6%, while France's CAC 40 climbed 1.9%, and Germany's DAX increased 1.5%. Wall Street closed higher. The Dow was at 11,632 after gaining 29 points or 0.26%. The S&P closed at 1282, up $5 or 0.41%, while the Nasdaq finished trading at 2325 with a gain of 21 points or 0.95%. Transportation was the leader among the 12 S&P sectors, gaining just over 2% on oil's continued decline. Financials gained nearly 1.7% as traders continued to buy into the theory that firms will be able to weather the storm created by the worst housing market since the Great Depression. Oil continued the slide that started on July 11th and added to the 15% move lower with a drop of 3.1% in U.S. trade today. Gold moved lower for a second session off a whopping 2.7%. Moves look to be an automated response to the dip in oil prices and the bounce in the dollar. Overall, this storm shall pass was still the order of the day as news which indicated Tropical Storm Dolly was expected to miss most major oil and gas installations in the Gulf of Mexico and ease supply concerns and helped oil fall as much as $2 a barrel after falling nearly $5 yesterday. There was plenty of other support given to the greenback. It was reported today that 2 Federal Reserve officials voted to increase the discount rate by 25 basis points at the June meeting, and that the U.S. House of Representatives agreed to allow the Treasury to backstop Fannie Mae and Freddie Mac. So in this case, this storm shall pass might also be applied to the financial storm created after the U.S. housing market entered the worst period since the Great Depression, causing as much as $345 billion in losses to be written off by the world's biggest commercial and investment banks.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.